As a child, I learned the golden rule was do unto others as you'd have them do unto you. But as an adult, I kind of came to take it as who has the gold makes the rules. This section is about gold. Well, more than just gold. Now, gold as an investment has problems, at least as the market sees it. The number one problem with gold is that it doesn't pay a dividend. Now, there's so many tech stocks that don't pay a dividend, and there doesn't seem to be any problem with that. But the market says gold as an asset class should be a very small portion of your portfolio. I want to tell you, as a penny-priced option trader, gold, silver, and gold and silver mining companies should be a high focus of your attention. We're going to get the dividends of trading options. Now, the first thing you need to know about gold and silver, there's no risk to zero. I've read somewhere that the streets in heaven will be paved with gold, but here on earth it's not asphalt. Now, gold has fundamental information, right? And I consider it somewhat fundamentally unflawed. I personally think gold is very pure in its economic sense. The market asks a question, though. Is gold a commodity or is gold a currency? You see, as a currency, it trades against other currencies. As example, the dollar. So when the dollar gets weaker, gold gets stronger. Now, we've seen this in the past few years as the price of gold has gone from $400 an ounce to $800 an ounce to $1,200 an ounce to $1,600 an ounce, and so on. So much of this is a function of the dollar dropping in value. Traditionally, gold would be a commodity, and as the business cycle goes down, commodity prices go down because of supply and demand. So I ask you the question, is gold a commodity or is gold a currency? I think the answer is gold's an opportunity. Now, we're just not talking about the physical metals in this presentation. I'm not talking about Cougarans or Maple Leafs or $20 gold pieces or any of that stuff. I'm not talking about futures contracts or commodities. I'm talking about options on the ETFs. We're trying to get risk-controlled leverage. Now, the symbols for discussion in this presentation will be GLD, the tracking stock for gold, SLV, the tracking stock for silver, and GDX, the basket of gold and silver mining companies. Understand, presently, GLD is 1/10 the price of gold. So if gold is $1,500 an ounce, GLD will be $150 a share. SLV presently matches 1 ounce of silver. So if silver is $40 an ounce, SLV will be $40 a share. Also understand, though, that quite often you'll get the price of gold and silver on the television or in the newspaper. They're extrapolating their price from the futures exchange. We are specifically looking at these ETFs, not physical metals, not futures or commodities. Now, GDX is a basket of mining companies. Here's a snapshot from a number of months ago showing some of the different symbols for the different companies that make up this basket of mining companies. And you can see that there's a number of companies that have roughly 5% of this basket, and then there's a couple that are over 10%. It is not the focus of this presentation to look at the individual stocks making up this basket of stocks, but you could do yourself a favor by being aware of them and looking if there is an option opportunity on any of these individual ones. We're going to start by looking at gold. Again, GLD. I'm going to call it gold because I just don't want to call it GLD over and over again. I'm going to call SLV silver. These are tracking stocks, not physical metals, not futures, not commodities. GLD is gold. Here we have from June of 2010, we had an overnight close of 47. It opened at $1, which was a double. It traded up to $1.53, which is a triple. Silver, 22 cents for this option, opened at 45 cents, which is a double, went up to 50 cents. We have seen the leverage that gold and silver offer. I want to show you where the real leverage is. It's GDX. I call this leverage on leverage. First of all, let me share with you the concept of why I call it leverage on leverage. Gold has a value. Silver has a value. The mining companies pull the metals out of the ground and make a profit. Their costs tend to be fixed. Their profits tend to float. The higher the metals go, the higher their profits. The lower the metals go, the lower their profits, and so we have this leverage effect. Understand one thing, while the price of GDX should move in correlation with gold and silver, it doesn't always. Anyway, let's give you some screenshots showing you how much GDX can move. Here we have a close at 29 cents. We open at 41 cents. It trades up to 72 cents. Better than double, not quite a triple. Here's a move that in 2 days quadrupled. Right? This move went up to $1.18. 29 cents, doubles to 58, quadruples to $1.16. Here we have this option moving up to $2.06. Again, if you started at 29 cents and you sold somewhere along the way, you made a nice profit. You may have traded at sloppy slop, but you made a nice profit. The ironic thing, the person that you sold it to, they could have bought it and they could have still doubled their money. We get a move that takes place over a number of days and takes a number of doubles. It's a good move, no matter what part of it you get. Don't anticipate getting all of the move. Just try and get a lot of it. Well, can I mention, don't anticipate trying to get all of the move? Here we see the same option go up to $3.25. In less than a week, 29 cents became $3.25. $29 a contract became $325 a contract. This is an 1,100% move. Can you tell me any mutual funds, any indexes, any recommendations that you can think of that can generate an 1,100% move in a week? Well, if you haven't figured it out already, I'm showing you one. And let me tell you something, this will not be the only 1,100% move that I'm going to show you in this section. Now, why is this possible? Well, it's possible because of the gamma system we teach here in penny-priced options. Silver and the mining companies have weekly options. They have 52 expirations a year. GLD Gold will also have a quarterly expiration, and as long as the last day of the quarter is not on a Friday or the last day of the trading month, there can be up to 56 expirations. We have 56 opportunities for maximum leverage, worthy of our attention. Here's a quarterly option on gold. It opened at 51 cents. It traded up to $1.17, more than double. There are lots of opportunities, not just in an uptrending market like gold has been over the past few years. We can trade puts as well. And on some days, we might get a double on both the call and the put. Here's a call doubling overnight. It closed at 41 cents. It opened at 93 cents. That's a double. Well, 93 was the high of the day. This thing sold off the rest of it. But the call did double, overnight, mind you. Now here's the put. The put opened at 51 cents and traded up to 97 cents. That's a nickel away from doubling. But I asked a question. Since the market closed with the option at 97 cents as the last trade, but when it closed, the bid was $1.03 and the ask was $1.08. If someone who had bought it earlier at 51 If they had put a good till cancel order to sell it at $1.02, they would have been filled. They would have doubled. Now, there's lots of opportunities. We talked just a second ago about calls and puts doubling both on the same day. There could be more than one strike price double on the same day. Here's GLD. Here we show a number of put options on GLD in July of 2010. Let's first look at the 117 put. The low of the day was 16 cents. The high was 42. Now, you should not assume that the high came after the low or the low came after the high. Let's look at what we know. We know the range is 16 cents to 42 cents. This screenshot was taken while the market was open, and we can see that the last trade was 34. We know that the last had to come after everything else. That's why it's last. Anyway, the last is 34 cents. That's more than twice the 16-cent low. To the right, we see the 118 put. We have the current at 63 cents, the low at 33 cents, and the high at 75 cents. While we don't know that the low came before the high, we do know that low is less than last, and that's almost a double. And we now look at the 115 put. This one opened at 8 cents, traded between 6 and 14 cents, with the last traded at 11. Now, again, we don't know what came first. We just do know what came last. But on the lower part of the screen, we see the chart of the movement on GLD this day. We have the stock rally up around 11 o'clock, go sideways, and just before noon, it sold off. We can get lots of intraday doubles. Here, gold opened at 60 cents, traded up to $1.60. Now, while we're pointing this out, this screenshot shows the expiration date of July 22nd. This particular website has a little bit of an error that hasn't been corrected in a year. I don't know that anybody's told them, and it really doesn't bother me because it's just a minor annoyance. See, options expire, traditional options expire the Saturday following the third Friday, and so they'll list the expiration date as one day before its actual expiration. And one day before Saturday is Friday. So on the third Friday of each month, they have the expiration date correct. Weekly options expire on the Friday, right? Not on the Saturday following the Friday, but the actual Friday. And their coding for this website has the expiration date as one day before the actual expiration. So for whatever stupid reason that they can't fix it, they show Thursday's date. But what they're not showing wrong is they're showing this option opening at 60 cents, trading up to $1.60, and then closing at $1.04. There's lots and lots of opportunities in trading gold, silver, and gold and silver mining companies. The beauty of these opportunities is that they are very often very inexpensive options. They can generate very, very large percent returns. Here's a move on GLD. As you can see, it opened at 5 cents. I know every one of you can afford a 5-cent option. There are 100 shares per contract. That's $5 a contract. If you cannot afford a $5 contract, you need to study this course that much more, because if you don't have $5, you can find $5, mow the neighbor's yard, earn $5, open an account, trade this. In a day, it went from $5 to $32. Here's a move on GDX. Open at 12 cents, went to 30 cents. That's certainly more than a double.